Welcome back to the deep dive. You've given us the sources, the reports, the tickers, and, well, our job is to dig in.
Right. Find those key insights for you.
Exactly. Cut through the noise, basically. Make sure you're genuinely informed.
And today we've got a really interesting mix from recent reports. We're going to break down three pretty significant stories in business and tech.
Yeah, we are. First up, a major software acquisition, really linking data and AI.
Then there's a maybe unexpected crypto move by a media company.
And finally, how global trade tensions are hitting a big e-commerce name. You can really see the impact there.
It definitely shows how fast strategies are shifting across different sectors.
Absolutely. Ready to get into it.
Let's dive in.
Okay, so let's kick things off with that big tech news. Salesforce, they're agreeing to buy Informatica.
Yeah, that's a headline. An $8 billion deal.
Looks like they're paying $25 per share for Informatica's Class A and B1 stock. It's a mix of cash and new debt from Salesforce's side.
Right. And the timeline is interesting. The reports say it's not expected to close until Salesforce's fiscal year 2027. So, a ways off.
But the market reacted immediately. Informatica shares jumped. What was it?
About 5, almost 6% on the news. A decent pop.
No, what's really fascinating here, and the sources point this out, is that this isn't the first time they've talked.
No, exactly. They were reportedly in talks back in 2024, but nothing came of it then. They fizzled out.
Any idea why? The reports didn't specify, did they?
Not exactly why, but there was suggestion maybe Informatica was seen as overpriced at the time.
And their shares have come down since then.
They have. And that deal back then was rumored to be bigger, right? Like closer to $10 billion?
Yeah, compared to the $8 billion now. Makes you wonder.
Definitely. And considering Salesforce's history, the sources remind us they've backed off big M&A before.
Right, shareholder pressure has been a factor.
And this $8 billion is their biggest acquisition since that massive Slack deal in 2021. What was that, $27.7 billion?
Huge. So the question the reports naturally raise is, will shareholders push back this time?
That's a fair question. It does fit that pattern. Software companies, ERP, CRM, using acquisitions to grow quickly. That acquired growth strategy.
Okay, so $8 billion is a lot. What's the core reason? Why now? The reports seem pretty clear on this.
AI. It seems to be all about AI, and this concept Salesforce keeps mentioning, agents.
Yeah, Mark Benioff's quoted saying this combination creates the most complete agent-ready data platform.
Right, and Steve Fisher, their CTO, really connects the dots. He basically said, let me find the quote. Yeah, truly autonomous, trustworthy AI agents need the most comprehensive understanding of their data.
The combination of Informatica's advanced catalog and metadata capabilities with our Agentforce platform delivers exactly this. So Informatica provides that critical data piece.
Precisely. It feels like agent might be the next big buzzword in enterprise software, especially with AI layered on. Think automated intelligent assistants.
And they need clean, accessible data to function.
Exactly. And the plan outlined is to use Informatica alongside their other tools, Data Cloud, MuleSoft, Tableau.
To, as the reports put it, enable autonomous agents to deliver smarter, safer, and more scalable outcomes. Makes sense strategically.
It does. Though one kind of curious detail some analysts noted, Jordan Klein at Mizuho was mentioned.
Oh yeah, the timing.
The timing, yeah. Announcing it literally the day before their earnings report. Klein apparently questioned, why not wait a couple of weeks? Get past earnings first.
Interesting point. So, wrapping this one up for the listener, why care? Well, it shows how big tech is positioning for AI, focusing on that data foundation.
Right, and M&A is still very much on the table, even with potential shareholder scrutiny.
And keep an ear out for that term agents. Seems like we'll be hearing a lot more about it.
Definitely.
Okay, let's completely switch gears now. Another trending ticker from the reports. Trump Media, DJT. They've announced plans to raise capital.
Yep, looking to sell stock and convertible notes.
And the reports suggest the outcome could be a big jump in their liquid assets, up to $3 billion.
That's the number being floated. But the really eye-catching part, highlighted in the sources.
The Bitcoin treasury.
Exactly. They intend to use some of the proceeds to create a Bitcoin treasury.
And the comparison being made is to MicroStrategy, right? Following their playbook.
Pretty much, yeah. The MicroStrategy, now strategy playbook is how one source put it. And DJT shares got a little bump on the news.
Okay, let's add some context here, just sticking to what the reports say. We know President Trump has talked about making the U.S. a crypto capital before.
Right, the reports also mention the U.S. government itself is already the biggest holder of Bitcoin among nations.
So this corporate move, some sources frame it as kind of tying his name, annexing the name to crypto holdings within his company.
And the reports note DJT has tried different things. Streaming was mentioned. And this move is seen as a way to get more capital to, well, throw around as a whale within the crypto landscape.
A whale, meaning a big holder who could potentially influence prices.
Precisely. And this comes right after, didn't they just hold a dinner last week?
Yeah, the reports mention that, bringing together some crypto profiles, even holders of the Trump meme coin.
So the key question the sources raise is about the strategy here. Is this long-term holding, or are they looking to cash in on the next big crypto pop?
Good question. And it points to what the sources call an increasing enmeshment between the Trump family and cryptocurrency, especially since Trump himself still owns over half of DJT.
Right.
So the takeaway for you, the listener, it's an example of how different kinds of companies, even politically linked ones, are exploring assets like Bitcoin for their corporate strategy.
It really highlights that evolving landscape of corporate treasuries and, well, the market speculation that still surrounds crypto.
Okay, third story for today. Let's look at the reports on PDD, the parent company of Temu. They missed their Q1 earnings expectations.
Yeah, a notable miss. And the sources are pretty direct in linking it to trade tensions, specifically U.S.-China tensions.
The impact was clear. Reports say it marked their slowest growth since early 2022.
And the market reaction, pretty harsh. Shares dropped about 17.5% after the report.
Wow. And sources note the stock is down over 30% in the past year or so.
Yeah, and digging into the financials, operating profits were down 38% in the quarter. That's significant.
So what's the specific trade issue here, according to the reports?
It seems to center on that de minimis exemption going away.
Ah, right. The rule that lets small shipments under $800 come into the U.S. tariff-free.
Exactly. That exemption is gone now, so there's some tariff on those items, even if other bigger tariff fights are on pause.
And Temu, with its model of shipping lots of small individual packages directly, was seen as particularly vulnerable to this change.
Definitely really seen as affected by that, as the sources put it.
So how are they trying to adapt? The reports mention a strategic shift.
Yeah, they're apparently trying to get ahead of it by shipping larger quantities into U.S. warehouses first.
And then having local merchants sell and ship from within the U.S.?
That seems to be the idea, trying to bypass that direct small package import issue.
Though the sources also caution it's a quickly changing situation regarding trade policy. Things could shift again.
Absolutely. This story is just a really clear illustration, isn't it? How international trade rules, like tariff exemptions, can directly hammer a major global company's bottom line and force strategic changes.
Yeah, affecting services people use every day.
Mm-hmm.
All right, so let's wrap up this deep dive. We covered quite a bit. Salesforce buying Informatica, a big bet on data for AI agents.
Then Trump Media making waves with its Bitcoin treasury plan, echoing MicroStrategy.
And PDD feeling the very real effects of changing U.S. trade rules, specifically that de minimis exemption change impacting their earnings.
3 different sectors, 3 different stories, but all showing just how dynamic things are. Tech shifts, financial innovation, geopolitics. Companies have to adapt fast.
Definitely. So here's a final thought, pulling from all this. Just consider how quickly corporate strategies are shifting right now. You've got tech giants spending billions on data infrastructure for future AI agents.
And then you have other companies fundamentally changing their balance sheets to include things like Bitcoin, which is still pretty volatile. These are bold moves, sometimes controversial.
So think about how these big strategic pivots driven by technology, finance, policy, how might they reshape the industries, the companies, the services you interact with in the next few years?
Yeah, definitely something to keep thinking about as this landscape keeps evolving.